you remember our history, we kind of tried to start a sports, podcast right before COVID.
Yep,
And,
we did.
And obviously when COVID hit, we couldn't watch sports, couldn't really go out, we couldn't really do anything. So,
nope, not at all.
Fortunately for, some of us, we kind of lost, some of us got unemployed, but some of us, kept our jobs. And with that, we were kind of sitting on a lot of money and nothing to spend it on. So
yep.
Naturally, my thought was, well, what a great time to start investing. Market had just dropped about 33% in early March, and I said, you know what?
It was not looking good.
It was not looking good, but I said to myself, this might be the best time to start investing. If you are a brave man, because that's the key thing is, when the market goes down, you have this fear that maybe things are worse to come, but you have to be able to stare into the eyes of risk.
Right.
And jump into it, and for every day the last 4 months they've been saying market's going to drop further, and it hasn't, and knock on wood. But nevertheless, it's a principle of life is over time as you build your lifestyle, your wealth, part of that equation is investing.
Oh, absolutely.
And there's a lot of different approaches to how do you invest. Obviously you have your retirement accounts, and we can definitely talk about that at some point. People who don't want to really, do a lot of their own research, but want to, make some money that's not retirement, they can invest in mutual funds.
Sure, absolutely.
But as I said, with COVID, we had to stay home, couldn't really spend money, and I said, you know what? Why don't I just do this myself?
Right.
And people will probably say, what are you doing? This is your money. This is risky.
Yep.
There are people who are hired professionals to do it. Well, it turns out we're finding out that a lot of people are kind of doing this. They're kind of investing on their own. And the phrase is called retail investor, by the way, if you haven't heard that before. It's basically a fancy way of saying I'm doing my own stuff because it's a lot cheaper than paying somebody else to do it.
Yep.
And so this has kind of been my new thing the last 4 months. Absent of sports. I've been trading ESPN for CNBC.
Okay.
And Yahoo Finance, and kind of looking at a lot of stocks. And there's a lot out there. There's a lot of things to look at, and it's a very I won't call it a hobby because it's more it is your money. It's really an investment, but it's definitely when you have the time in your hands to kind of look at these companies and figure out which ones you want to buy.
Right.
To yourself. And the key thing, and I'll say this, Dave, is about a year ago, because one of the things that discouraged people from investing on their own was that it used to be a lot of commissions by your broker.
Right.
You'd be like $7 a trade or something like that, and so even then you were still getting money eaten away just by doing your own.
Right.
But then a lot of these brokerages, I don't know if you heard of Robinhood.
I have.
Yeah, and they do the fractional shares thing, but basically these are companies that are now allowing the retail investor to do $0 commissions. Basically, just buy and sell on your own dime, and not pay. You pay a penny to the SEC when you sell a stock, and that's all that comes out of your wallet for doing it. But you can buy these stocks for free, and if you know what you're doing, you can actually, you'd be surprised how much money you can save by not using a mutual fund.
Let me chime in really quick.
Mm-hmm.
First of all, neither one of us claims to be experts. So let's throw that out there for starters. Also, neither one of us want to feel like we're pushing an opinion or pressuring anyone at any time, regardless of what topic it is.
Yeah.
A lot of what we're going to talk about are going to be our opinions, and we will make it very clear when things are fact, or when we're trying to be factual. But a lot of this is going to be opinion. It's going to be subjective to the listener and to us. And so I just want to keep it light on that note too. So, and this is, again, by no means you pushing anything on them, Eric.
No,
right?
You're right, David. And, as we do more segments, I'll dive in a little bit more specifics. We'll get certain stocks, stocks to buy from, certain companies, some strategies that I like to implement. And, and I'll say that these are my opinions. These are how I choose to invest, and that's part of being a retail investor too. Is that you get to you have the freedom to choose how you choose to invest. And it's a high risk, high reward, because if you don't know what you're doing, yes, you can lose money on your own.
Right.
Without that opinion, but so far, again, knock on wood, I've been pretty successful.
Yep. Sure.
And so for me, it's just kind of communicating what's worked for me so far, and hopefully I can give you guys some advice in terms of what could probably work from you. But yeah, you're right, Dave. We're not here to say this is how you're supposed to do it. We're not licensed to give that financial advice, and we do want to put that disclosure out there.
Mm-hmm.
Yeah.
Yeah, I'm definitely not licensed.
Yeah.
But like I said, the majority of this is going to be lighthearted, fun.
Mm-hmm.
Occasionally we'll laugh and not be the stoic men you see before you today. We'll definitely generate a more upbeat, generic show for you guys, just so that it can be appealing and not feel like you're in a lecture hall.
Exactly.
But yeah, like I said, we're just getting started. This is going to be a little bit of a test, and we're gonna figure out the kinks kind of as we go.
Mm-hmm.
But yeah, so what else on the market stuff or stocks, or is that kind of what you're leaving it as?
Well, no, we can talk about some strategies, and there's a lot of ideas out there about
Right.
First of all, when's the right time to buy a stock? And I say the right time to buy a stock is when you're ready to start investing. They'll obviously, you've heard the phrase buy low, sell high, and there's a lot more to that. But basically, I find that there's no wrong time,
Of course.
to start investing.
Sure.
A lot of times what they recommend is when you first start to buy an index fund.
Right. Yeah.
An index fund generally is a pool of different stocks, and it's so blended that you generally can keep up with the market. The S&P 500 is your kind of your benchmark in the stock market, and so they always recommend that your first $10,000 should go into an SPY fund.
Yeah.
I did not do that. So maybe I'm crazy for not doing that, but I also got in at a very unique time too, so there's a lot to be said about that. One of the things about the stock market, and I always start with this, Dave, and I don't know if your money managers or your Warren Buffetts or or whoever really dives into this philosophy too well, but I always say, you look past the fundamentals and the right time to buy, and I say, we'll start off with look at the industry.
Right.
Look at I'm not saying you're going to have a crystal ball in front of you and you can predict the future, but that's part of what you're trying to do, is you're trying to predict where these things are going to be in the future. So for example, if you're talking about the near future, I would not buy a Macy's stock right now. My opinion.
Why Macy's?
Because basically, there's a lot of gone in the retail world.
Trust me, man. Well, I was literally having this discussion with someone the other day. The idea that, sorry to cut you off too, it's that a lot of, especially with everything going on lately, we're being pushed to do even more online shopping than we have in the past. Yeah. And oftentimes we've seen that has helped a lot of industries, but it's hurt the retail industry because it hurts the ability to try clothes on.
Exactly.
And a lot of times that's a turnoff, especially, this is not even to generalize here, but a lot of times women tend to want to try their clothes on when they're at the store before they actually purchase them. Yeah. And I don't. I typically don't, unless it's like something like a nice pair of clothing or a suit or like something formal. I typically don't. I'm in and I'm out, within minutes. But Macy's is a lot of.
Yeah, and there's a bunch of other stocks go out there too. Best Buy, Bed Bath & Beyond. But generally, the thing about the retail is this, Dave, and this is actually goes before COVID, was that you've already had a pretty big shift to e-commerce.
Yes.
Before COVID, and then COVID kind of doubled down on that, because now I don't say a dying industry, but an industry that was kind of really falling apart a little bit, got even pounded even more by saying you can't even operate in a box retail environment, that you have to be strictly online.
Yep.
And so, with that in mind, that's why I bought an Amazon stock.
You bought?
I bought an Amazon stock. It's not cheap. It's definitely not cheap.
I know. I'm in Microsoft.
But Microsoft's not a bad one either. And we can talk about Microsoft at a later date for sure, because I do own some of that too, and that's a very fun one. But for this topic, I'll wrap up by saying, you have to understand, you know, where things were, where they are now, where they're going. And I think that's a very critical part of your investing strategy. So Amazon, yes, very safe stock. Microsoft, you know, that's also very safe stock. You know, we're not getting rid of Microsoft anytime soon, I don't think.
I don't envision that.
And they're starting to own a lot of things out there, so.
Yes, they are.